with increased inflation, we could also see bouts of volatility, right? So where is a safe place to park your cash?
Yeah, I mean, completely safe is always a bit of a challenge, of course. But yeah, beyond equities, where we have been quite positive, basically since last year already. I think what comes in now, and we have to consider that yes, we do have very strong earnings growth, but the earnings growth as such, right, year over year is probably peaking as we speak. So in the second quarter, not that it's weak afterwards, but it's sort of reaches a bit of its climax. And yeah, you mentioned also the rates and the central bank situation. So we do believe, in other words, that there's still upside towards the end of the market for equities. But what we also recommend now, more recently again, is to take another look at the hedge funds, because usually during the summer months, after such a strong rally, and you get another first quarter that's very, very strong in equity markets, there could also be the odd correction here once in a while during the summer months. So yeah, to round it out with the hedge fund space, for example, could be timely.
Yeah, during the summer months then, which could be the bigger risk for the markets? This is our question of the day today. Is inflation or virus a bigger tail risk?
I would say it has to be inflation. I believe that the virus, even in regions where they struggle perhaps a bit more. I mean, the 80 vaccinations are coming, but especially here in the region and in many of the emerging markets. Take India for an example. And if you look at some of the studies that we have seen, not that the vaccination rates are particularly high, even though they're accelerating, but what is high already is the number of people who carry antibodies. So in other words, they're getting immune without a vaccine in that sense. So therefore, yeah, I think inflation, at least in the near term, when everybody opens up at the same time, more or less, this could probably be the bigger worry for the market.
Hartmut, to the other side of, I think, Sherry's question, or our question of the day, taking a look at the resurgence of the virus here in Asia, I want to throw up this chart, which looks at Asia-Pacific daily virus cases at the highest since the start of the pandemic. And that's not even including, of course, India, where the situation is so bad. Is there a real risk that we see this kind of US and UK exceptionalism and a lack of investment interest as a result of the handling of the vaccine rollout and the virus here in Asia?
I very much doubt that, and I doubt it for two reasons. The first one is that the waves that come now, they're sort of shorter. It seems. I mean, India is already. Of course, these are still high numbers, right? But India is already pretty evidently past the peak, certainly also in the official data. And the other one is that the countries also realize, and especially a country like India, where the government finances, I mean, they have very limited room to really support the economy. And as a result of that, they have very early on said that, at least on a central level, they're not going to do the same stringent lockdowns as last year. So you get an improvement year on year, and therefore I think the market is looking through that. I don't think it has, a few percentages here and there, but I don't think it has a lasting impact.
So one of the markets that you see exceptional growth opportunities, your words, is China. So does that mean you think, from by and large, some of that regulatory overhang is over? Hartmut, I wanted to get your views on China, which is one of the areas where you see exceptional growth opportunities.
Yes. I wouldn't necessarily say it's over. Right? Some companies are still in the review period. We know that. Some are already past that. However, we're coming towards the last innings, right? Because this is not the first regulation we see in China, probably also not the last, but in any case, they come in waves and they go in waves. So typically in the past, we have seen up to 9 months or so, and then the stocks re-end towards the tail end already, so they don't necessarily always wait until the final announcement is made. And we are there, right? We're getting there. Some companies already know, right, the fines, etc. Some don't. But it comes to the last innings, and these stocks have, and this is a key reason why they're heavy in the index. That is a key reason why China has underperformed. So we're moving towards the later leg of that. I think it gets quite interesting there.
Yeah, this GTV chart on the Bloomberg actually showing that tech sell-off across China since that stronger crackdown was started last year. What happens in the long term, not only because of what's happening in China, but because of also the crackdown perhaps here in the U.S. with Chinese ADRs? Right now, of course, we do have that overhang of U.S. investments being banned in Chinese companies allegedly involved with the military.
Yeah, although also I think at least the U.S. side, I mean, you can never say never, but it seems like we had really the climax of that under Trump, and then afterwards there weren't any major and real threats to sort of force delist or not allow investment. So it's sort of quieted down a bit, and it's also, I mean, it is for Wall Street is a relatively big business. Right? As Chinese companies want to continue to list there, so I'm not sure they really want to close that door completely. Yeah, and otherwise, yeah, as you rightly say, right, we have a strong correction. I mean, some of the names down 30% on the regulation fears, but we do know the regulation will end at some stage for some companies. It has already. I think it is a place where investors should look again.